Today, a new lab study finds that Pfizer's vaccine appears to neutralize a highly contagious COVID variant first identified in Brazil. Plus, we dive into the latest trending investment vehicle, digital art and videos called NFTs. And finally, Tesla stock shifts into ludicrous mode. I'm MacKenzie Sigalos, and this is CNBC After Hours. It's green across the board for Wall Street. Today's biggest winner, well, the Nasdaq, roaring back more than 3.5% after falling into correction territory, which is just finance speak for falling 10% below its most recent high. Now, investor optimism extends to the outlook for the coronavirus pandemic. Even though Bloomberg's vaccine tracker shows that nearly 94 million shots have been administered in the U.S., fears of new variants persist. But now, data from a study published in the New England Journal of Medicine shows that Pfizer's vaccine can neutralize some of these variants. Meg Tirrell can explain.
So here in the United States, the CDC has identified 3 variants of concern, strains of the virus that they're worried about either because they're more transmissible or because they pose risks to the protections the vaccines provide. They are known as B.1.1.7, which was first identified in the UK, B.1.351, first identified in South Africa, and P.1, which is associated with Brazil. Companies have been running experiments in labs, essentially taking blood from people who participated in the clinical trial of the vaccines and using that to see whether the antibodies that they generated from the vaccine can work against these strains. And now the latest of these lab studies gives us a glimpse of how the Pfizer-BioNTech vaccine performs against all of these variants, and in particular interest against P1, because we haven't seen as much data against that variant as the others. Now what it shows is that both B.1.1.7, the UK, and P1 associated with Brazil, the neutralizing antibodies, appeared roughly equivalent to older strains of the virus. So that's very good news. Against B.1.351, they said the neutralization was robust but lower. And they do say that we need real-world data showing how well these vaccines protect against these variants, but it is reassuring news that these should be protected against. And as B.1.1.7 is the most prevalent here in the United States, and seeing that strong neutralization against it, it really reinforces what we've been hearing from public health experts and officials, that as they are worried about that spread, the vaccines should work against it. So as more and more people get vaccinated, the CDC is now telling us we can start to do things the way we used to do them. So they issued new guidance this week that was highly anticipated, where they said that fully vaccinated people can have a few more freedoms, like getting together with other fully vaccinated people without masks or social distancing. Importantly, they also said for people who are fully vaccinated, they can see unvaccinated people from a single household who are all healthy, also without masks and distancing. And some experts I was talking with called that the grandparents clause. For example, fully vaccinated grandparents could go see their healthy children and grandchildren as long as all of those folks are not high risk for COVID. They don't have to wear masks, they can have hugs. Those were the main takeaways of what people who are fully vaccinated can do. However, they didn't change everything. A lot of people were expecting the CDC to say, if you're fully vaccinated, you can travel. They didn't change anything about their travel guidance because the CDC director said, history has shown us when travel surges, so do cases. So they're still being pretty conservative about that.
Okay, let's get to our sound check. Here's a roundup of the day's biggest action and what the top newsmakers and business leaders had to say on CNBC's airwaves.
Because we're not a bank, we have to rely on someone else to provide us a partnership that sets that interest rate for us. And so now our interest rate is very low because the federal funds rate has dropped to essentially zero. When we have a bank charter, we'll be able to determine what interest rate that we want to provide and not be dependent on anyone else.
As the president said, we need to build back better. Most economists, like 90% of them, say the biggest mistake we can make right now is not spending enough money. And I believe that this is going to be great for our economy, and we'll have to see what the results are.
one of the ad campaigns that was, I think, one of the first ones that instead of sending out a message of we're all in this together and it's all going to end, etc., finally sending out a message of the new normal and what it's going to look, at least connecting to that energy. So I also think that made it stand out more than it would otherwise have.
It's fun to think about your travel plans, but gosh, make sure you have a flexible cancellation and buy your travel insurance, because these restrictions, as we learned over the past year, can change very quickly. And you don't want to be out lending money to an airline for free.
All right, so there is big money in the digital collectible space. We're talking art, photos, and videos of just about anything that are selling for astronomical sums. For example, people have spent more than $230 million buying and trading NBA highlight clips. And now, fresh off his Super Bowl win, NFL star Rob Gronkowski wants in on the action. He's going to release his own NFTs, or non-fungible tokens, similar to digital trading cards. And it's not just sports. Twitter CEO Jack Dorsey is auctioning off an NFT of his first ever tweet, and people are bidding millions of dollars to own it. Confused? Robert Frank can explain.
Jack Dorsey of Twitter becoming the latest to join the NFT craze. He put up for sale an NFT of the first tweet ever. Just 5 words, just setting up my Twitter. That was back from 2006. The high bid for that first tweet now at $2.5 million. Some say it could go even higher. The record for an NFT was actually set last week. This was for a work by the artist Mike Winkelmann, better known as Beeple. A guy bought his digital picture for around $67,000, then flipped it last week for $6.6 million. People could actually break the record again this week. There's a piece of his being auctioned at Christie's. Current bidding there is just under $4 million, but it doesn't close until Thursday, so that also could go a lot higher. Just about everything, whether you're talking about music, digital memes, videos, Lindsay Lohan's face, all of it now being turned into NFTs and sold for 5 or 6 figures. NFT stands for non-fungible token. Basically, it's any digital thing. So it can be a video, it can be a meme, it can be a picture or a tweet, and it is given or assigned a code or signature on a blockchain. So it says that this thing is owned by you. Now, the ownership is a little bit tricky because you don't own the reproduction rights, you don't necessarily own the copyright, you don't own the right to produce many of these things, but basically it is a digitally encoded on the blockchain asset that says you own the right to this thing. It's really hard to figure out what kind of collectible this is because most collectibles derive their value from scarcity, authenticity, and popularity or quality. Now, quality is in the eye of the beholder. Certainly these things are popular. Authenticity is confirmed by the blockchain. Each of these items has a specific digital signature attached to the blockchain, and so therefore there can only be one of those. However, we don't know what the future or how secure that blockchain is, and unlike a Picasso or even a sneaker, which have become big collectibles, or a classic Ferrari, they derive their values from being that original thing and proving that they are that original thing and there weren't that many of them. Digital assets are just a little bit confusing and therefore I think not quite analogous to art in that they are endlessly reproducible.
Before we go, let's get to today's numbers round. We'll kick it off with 17.1. 17.1 million people tuned in to watch Oprah's explosive interview with Prince Harry and Meghan Markle on Sunday night, according to preliminary data from Nielsen. Now, this is the largest primetime audience for any entertainment special during the 2020 to 2021 season. And according to a report from Business Insider, CBS booked an estimated $20 million worth of advertising for the interview, though it is worth noting that the Duke and Duchess themselves were not paid to participate. Next, 100 million. Disney Plus has surpassed 100 million subscribers less than a year and a half after its launch. Now, the success of Disney Plus comes on the back of some of its very popular original series. Think The Mandalorian and WandaVision. This subscriber growth, it's faster than Disney itself had predicted. So the company initially expected to reach 60 to 90 million subscriptions by 2024. Disney is now forecasting that 230 to 260 million people will be paying customers of Disney Plus by then. And finally, 20. Tesla stock surged roughly 20% today, rebounding from a disappointing performance earlier this year as investors turned away from the high-growth tech names that fueled the market higher during the pandemic. Now, shares of the electric vehicle maker and cult favorite company had been selling off, shedding about 33% in the month before today's trading session. So why today's turnaround? Well, among other things, high-profile stock picker Cathie Wood from ARK Investment came on CNBC yesterday to say that she's still bullish on the company. You can check out clips from that newsmaking interview by going to CNBC.com and downloading the CNBC app. That's it for After Hours. We'll be back here in our home office every Tuesday and Thursday, so be sure to catch us then.